Well, good morning. I am not sure that we are streaming here, Jack. I'm getting chat disabled, and I'm not seeing us on the YouTube studio here. If you are seeing this, we apologize. We are, huh? How? Huh. All right, I guess we are live. I'm gonna probably have to go without some of the chat here, but that's all right. Welcome to Monday morning, traders. It's good to be with my futures family. It's time for the market prep. Monday, June the 5th. As always, our focus is on accurate context, good risk management, and remaining patient. This morning, we all come into the world with a little less uncertainty. They have finished the debt ceiling bill, which passed. U.S. equities are set to open up sharply steady, as we used to say on the trading floor, with a mixed focus and more firmly on rates now, perhaps. Awaiting the FOMC meeting, which is a week from Wednesday. We've got the PMI composite final today at 8:45 Central, 9 o'clock Central. Factory orders and ISM services index not expected to be highly impactful. As for the rest of the week, tomorrow we really have nothing. No information, no economic numbers on Tuesday, as far as I'm seeing on this calendar. Wednesday, International Trade in Goods, EIA Petroleum Status Report, jobless claims as usual on Thursday, along with wholesale inventories. That's a preliminary number. The EIA Natural Gas Report also on Thursday, and nothing due out on Friday. I don't see any talking Feds on the schedule because it is the 2 week before the FOMC quiet time, if you will. So we've got really just investors and traders kind of focusing on what's going to happen kind of a week from Wednesday. I mean, that's where the big number is. We've seen oil prices surge overnight on last night's open, but we're not well off those highs, at least for now, after the Saudis and the OPEC Plus promised production cuts to support pricing, facing sluggish demand, flying somewhat under the radar of economic numbers here this week. Tuesday, the World Bank and the OECD will release their projections for global growth. What is the OECD? It is the Organization for Economic Cooperation and Development. Interesting. All right. So the VIX this morning is up slightly, but it's still, I mean, it's 15.17, slightly lower than it was Friday at this time. The dollar index, 104.31. It was 103.51 at this time on Friday, so a little bit higher. The yield on the 10-year also a little bit higher this morning. 3.74% was 3.63% here on Friday. And as always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. Make sure you subscribe to our YouTube channel so you get notified when we do go live. And again, unfortunately, I am unable to see. Yes. Oh, okay. Thank you. All right. Whoops. Yeah, because otherwise the sound, right? Uh, I'm not able to see the chat for some reason. Okay. Yeah, I feel like I'm kind of flying blind because I like to talk to everybody, but we're just going to jump into the charts here, I guess. And well, maybe I can see here. Uh, now I got you. All right. Rooster, first in the room. Good morning, Rooster. Futures trading today. Good morning, Shaw. Lacey says good morning to everybody as well. Riza, Brian, Dan Trader. Good morning. Scott saw and he conquered. Pete, Charles, March, Brody, George, Theo, Jimmy, Jay, Matthew, Stash. Good morning, Bill, Cags, Sarah Hall. Prayers and love as always to you as well. John, Shy T, Jason Lewis, Chad. Good morning, Will. Shaw, good morning. You're one. Okay, you're all telling me, yeah, we can see you. I couldn't see you. That kind of another thing that kind of threw me off my game this morning. Good morning, Vince, RCU, Denise. Good morning, David, Jeff B, Gershom, Charles, RCU. All right, we couldn't tell, but all right. You see everybody. Anise is here this morning. Good to see you. Sarah Hall, you're good. Everybody's saying you can see me, but I couldn't see you. That was kind of whacking me out a little bit, but okay. All right. Travis, good morning. I may miss a few. Yes, Fed silence. Finally, we get some peace, right? Abdi, good morning. Um, James, good morning. White House Cap, good morning. Kaylee, James, David. If I've missed a few of you, I apologize about that this morning. And my brother Rick is with us. James is here, Gnostic. Good to see everyone. All right. Now that we've got our feet on the ground and we're ready to start the week, let's take a look through these charts, shall we? All right. So as always, we like to start with the E-mini S&Ps. Here's the daily chart. All right. So volume pretty good on that move to the upside Friday. It was even better in futures. It was 4.4 billion shares traded on the New York Stock Exchange. So the volume was actually pretty good. We added 5,200 in open interest. That's an estimate, of course, but it still indicates that traders were willing to buy at these higher prices. Their money is still coming in at these levels. There is one uncertainty past us now. Of course, we all are well aware that we have the debt ceiling signed, sealed, and delivered, pushing the debt further down the road, but at least we're not going to fall off cliff. So my question first thing this week is, are we too long as speculators? Was this longer time frame buyers or was this speculators on this move up? I mean, an additional 5,200 in open interest isn't all that big for a move of this magnitude. We've been moving higher over time. What's going to happen? If we're too long, we may fall into some sort of a balance up here, or even see some kind of a pullback. If we're not too long, I mean, what's to say that there's not a lot of money still out there on the sidelines that is just waiting to come in? There was news I was looking at a couple of weeks ago stating that some of the longer time frame, hedging traders were holding off on buying the S&Ps, on buying the stocks or futures because they were looking for a pretty deep pullback with which to be able to buy it cheaper. Well, they're missing out on it now. That FOMO could be enough to kind of continue to push this thing higher. So there's a lot of kind of different scenarios we're looking at. If we're too long up here, it's going to be very difficult to bring price any higher. And if the longer time frame sense that, they're going to hold off and see if they can get a pullback to get in at cheaper levels. But what happens in the S&Ps and the equities when there's no bad news? When there's no bad news, the equities just tend to grind to the upside. Why? Well, most of the stock eating public goes buy side only. Most people don't look to short. They're always working buy side only. So when there's no bad news and investors are coming into the market naturally has an upside drift. So without any bad news, and we don't know when something is going to happen, we just have to trade what we see and make sure and protect ourselves. Um, so I mean, my question is, have we become too long as speculators? If we don't have new business coming in buying this market, we may see somewhat of a pullback. I wish I knew for sure. Nobody does. So here's Friday. We did leave a gap. We've got naked points of control, a lot of them a lot lower. One good thing is we've finally put in a recent high in the regular trading hour session on Friday, so that we don't have that hanging over our heads. What did we do last night? We didn't do anything last night. We have no overnight inventory. We're in range. We're in value. I'm going to have to say, and you guys hear me say it a lot, try and stay patient. Let the market establish an early range, work those extremes for your opportunities. Look at the size of this overnight range. It's very small. The economic numbers we have today should probably not be all that impactful, but we don't know that for sure. Huh. I get a, yeah. My wife is home from work and she's outside with the dog, and the dog is going crazy about something. Sorry about the distraction. All right. So with no overnight inventory, narrow extended trading hour range in value, stay patient. Here's the TPO chart. Double distribution trend day to the upside. And distribution here and a distribution here. Is this market going to open in the area of possible repair? If it opens above the point of control, it may be indicating possible rejection of prices lower. If it opens below the point of control here, that may be indicative that the market is ready to pull back and sort of kind of finish up any business that wasn't done in this hole in this profile. So it's possible that we could see a repair type of situation today, where price trades to this point of control and to an assumed point of control down here. All right. So that's just one hypothesis. And if we open below point of control, that'll be hypothesis number one for me. We left the initial balance at the low of the day yesterday. The push was to the upside. We added volume. We added open interest. So the auction process is doing relatively well. Again, it's my own personal question as to, are we getting too long up here? A balanced day or a pullback could do a lot to even out that inventory. Here's the crude oil. All right. So price has initially rejected the weekly kickoff high, above the weekly kickoff high. After OPEC announced that those possible production cuts, the market gapped open. It has kind of rejected price above weekly kickoff high. I'm sorry, the S&Ps, I was looking at the wrong number. The S&Ps actually added 34,000 in open interest yesterday. Let's go back and look at that. I was looking at the wrong number here. The S&P's actually added 34,000 in open interest on Friday. That's pretty good. That's some good buying. That's probably more than just speculators. So maybe we've squeezed in some of the longer time frame traders. It's the 5,200 that was the addition to crude oil on Friday. We added 5,200 to crude open interest on Friday. We cut off volume a little bit, but it doesn't surprise me because we're kind of largely range bound. An overnight rejection of that range bound trade above weekly kickoff high. Obviously, that has come off. Well, it's all in, how crude traders, how traders are going to digest that information from OPEC and the Saudis yesterday. I think the last time there was a threat of this, none of them actually adhered to what they said they were going to do. So they like to scare the market, boom, and then they don't say they don't do what they say they were going to do. So that is entirely possible, and I'm sure lots of traders and investors have that in mind. So last week's high in play. It's right at it. Weekly kickoff high in play. Here's the 30-minute chart. So there's our gap to the upside over a weekend gap. We had one a couple of months ago when they threatened the same thing, and the market has come back below weekly kickoff high, back to last week's high. Is there an overnight inventory to this? Maybe, maybe not. I think that this push to the downside and the subsequent ranging and kind of return in the opposite direction. I'm not counting on any real overnight inventory here. So I'm going to be kind of thinking about, there's still a gap. We're still opening above the range on Friday. So I'm going to work gap rules this morning, right? So we got a naked point of control between price and the gap. That's might be an interesting visual level for the market to come look at. I gotta just stay patient. I'm if I were actively trading crude, this would complicate things. But we're still putting in higher highs. We're still putting in lower lows. If you put a trend line along the bottom here, that may give you an opportunity to limit risk. But again, there's a lot of visual targets, points of control, point of control, point of control, lots above, lots below. Take a look at the TPO chart. Not sure if this is going to help much because it was a normal trading day. Well, normal variation trading day, neutral in stance, excess low. There's a tiny little gap down here, and then kind of a low excess high. So it kind of makes sense if the auction isn't finished to the upside that we're getting an attempt to continue in that direction. Here's our open right here. So again, if we can't close the gap relatively early, it might mean I need to look for opportunities to buy weakness for continuation to the upside. What about the NASDAQ? All right. So I kind of warned, I think, Thursday and Friday of last week that the NASDAQ, as far as the auction process, was kind of showing signs of tiring, little signs of exhaustion. Well, we had 500 additional contracts on Friday. That's, of course, an estimate, but it just doesn't say that there's a lot of money behind this market holding up here. The day before, Thursday, we added 400 in open interest. So in 2 days, we added less than 1,000 in open interest on an upside auction. That doesn't bode well. It doesn't say that this auction process is very healthy. We've also been cutting off volume a little bit, at least in the futures here. So that's another indication that the market may be exhausting, maybe need to range for a little while or have some sort of a pullback. So I'm cautiously long. I mean, our structure's to the upside here, but we need new business. We need a new impetus to bring buyers to continue this move to the upside. Take a look at the 30-minute chart. And here's Friday. No double distribution. We'll see that in the profiles here. It was more of a normal variation type day. As a matter of fact, it was a normal day because the initial balance was the high and the low of the regular trading hour session. So we got a double initial balance extreme there. Well, where are we now? Overnight inventory reconciled. No real overnight inventory. Extended trading hour range, very small. This market is just kind of relaxing here, just kind of basking in the glow that it no longer has to worry about the debt ceiling and just kind of chilling out. It may be actually relaxing on a chaise lounge around the pool with a margarita. I don't know. I didn't get the pictures on Instagram from either of these markets this weekend. So the overnight inventory, again, recent high is in the regular trading hour session. So we don't have that hanging over us. Here's the TPO chart. So here's Friday, normal variation. No, it's a normal day. The initial balance is the extreme on both ends. It's a little bit of an extreme to the upside hint to this because of the fact that we spent the vast majority of the day above the halfway mark in the range. Very low volume here, higher volume here. Again, if we open below the point of control, we may fall into repair to the point of control from the day before, which I think would actually probably be healthier for the upside auction if we have gotten too long up here. I wish I could tell you 100% sure. Good. I wish I could tell you 100% sure, but nobody can. All right. Let's take a look at gold now. So I would call gold currently range bound. Extreme up here, the extreme low, last week's low and weekly kickoff low. We lost 7,200 in open interest yesterday. Since the 16th of May, back here, where is it? Since the 16th of May, so from this day forward, we have lost close to 100,000 contracts in open interest. That's 20% of the open interest. Nobody's trading gold. Why? Where's the money going? NASDAQ, AI stocks, wherever it's going, it ain't here. But that bodes, for potential explosive moves at some point in the future when some sort of change occurs. So last week's high and low are the extremes of the area of balance that I'm going to really focus more on this week than anything in the middle. I'm going to focus more on the extremes, not more on. I'm going to focus more on the extremes of the last week's range than anywhere else in gold. It's kind of unnerving to me to see that we've lost that much open interest in a relatively short period of time. So here's our long liquidation, bear flag breakout, losing open interest, not gaining open interest. So it wasn't a very strong breakout to the downside. We remember down here, we had, I think our weekly kickoff level was 19. Here, I could tell you, hang on. 1983. No, this was before that. 19. I don't remember now. I'm just flipping through papers to see if I can remember, but this rejection down here is at risk of being rejected again. Last week's low. Oh, so that was last week. 1945 was last week's weekly kickoff low. It's still this week. We didn't quite get to it last week. What doesn't happen and what does happen can be equally as important. We didn't get to it last week. This gap to the downside, overnight inventory pretty short. If we can't continue, we may see a pullback. If we can't close the gap, we look for opportunities to short. And again, this market has lost a lot of its open interest. It's lost a lot of its energy. I don't think I'll be trading it this week unless something really changes. Here's the euro. One little thing to remember, ladies and gentlemen, is we have the currencies and the equities in rollover this week. We'll be watching carefully to see when volume rolls into the September contracts, and we'll be letting you know right here on the market prep. But here's the euro still in the June contract, a potential potential market state break on Thursday, really just kind of falling into range bound activity. So I'm going to be looking at this as balance, and our last week's high and lows and weekly kickoff low are the extremes of this area of balance. Those will be probably more of a focus if price gets to one of them than anywhere in the middle. How about the 30-minute chart? So last week's high, weekly kickoff low, last week's low. Overnight inventory is a little bit short. Again, gap rules. If we can't close the gap relatively early, and I understand that is a subjective term, we're gonna see if we can't get a test of weekly kickoff low or last week's low. Would also be appreciative. The weekly kickoff low, 106.70, remains from last week. Here's kind of looked below it in gold as well. We looked below it here. We rejected it. Remains the low. TPO chart. Normal variation day, toothy, not a confident day on Friday. Wasn't a confident day on Thursday either. So this lack of look at this on Wednesday even. I mean, it's just all toothy. There's no confidence here. Got a relatively weak extreme here. Got a couple of weaker extremes up here. Wouldn't surprise me if this went into balance. We trade to this point of control. We trade back to this point of control today. Mondays are always tough. Mondays, you're just getting to see the story of the week. Here's the 10-year. Losing 56,000 in open interest on Friday. Off what I think is, yes, the weekly kickoff levels have not changed from last week. We tested to the high of it. We saw some pretty decent loss in open interest. In other words, any longs that were in this potential bear flag bailed on Friday. We're seeing potential continuation of the bear flag breakout. You'll see the bear flag a little bit more clearly here. So we opened out of it on Friday and we tanked. Makes sense. It's just a tactical move. And we're seeing some continuation. So again, we have the initial balance, the high of the session. We have continuation of the move to the downside in the overnight. Overnight inventory is short, no gap close. We're looking for continuation to the downside. We've got last week's low. We got a couple of naked points of control to contend with as far as visual targets are concerned. And here's the TPO chart. So we were kind of noticing, yes, last week on the way up, week high. That was Monday. Week high. Excess. A little degree of excess here. So the auction was kind of telling us that the upside auction wasn't over with these weak highs, Monday, Tuesday, and Wednesday. Thursday, we have excess. The market turns and heads the other direction. But again, I think it's largely in range. And let's take a quick look at the natural gas. All right. Well, with that one-time framing move to the downside seems to be over. Friday, we lost 2,600 in open interest. It is a double bottom. Is that going to be a double bottom reversal, or is it going to be viewed as a weak low? Remember, exactness in trading is not a strength, it's a weakness. Short time frame mechanical traders tend to trade there. Here's the 30 overnight inventory, a little bit longish. If we can't close the gap, we're looking for this market to continue a move to the upside. Here's the TPO chart, and we'll all get down to business. So here's excess low, it's actually a late spike that we've opened above. It's rejecting lower pricing. Even Friday with the week high, it was an unfinished upside auction. Now we're starting to see the upside auction starting to continue. It's always going to be a challenge any day that you have when we're trading. Yeah, free natural gas for all, right? It seems to be looking that way, right? All right. So again, it's Monday. Mondays, I tend not to be the best. I'm going to take it easy today. We got all week. There's going to be opportunities all week long. So we'll look forward to those. Remember, S&Ps and currencies are currently in rollover. They're going to act a little bit different. The Dow, the NASDAQ, the Russell, the S&P, they're all going to act a little bit different. Friday, that move to the upside, I thought that was kind of unusual because of rollover. But you never know what's going to incite buyers. And again, we don't know that that was longer time frame adjustments in inventory or if that was shorter time frame speculators. If it was, I suspect we may see a little bit of consolidation or a bit of a pullback, but I gotta wait and see. I gotta make sure that I'm patient and I'm looking for the right opportunity, looking to trade against structured so I'm able to limit my risk. And again, Mondays not my best days. Although this year it hasn't been that bad. I'm kind of pleased. But today I'm going to take it easy and be patient and wait for the right opportunities to come to me instead of going looking for them. All right. I guess that's it. We're going to take our deep breath, stay humble, grateful, creative, and centered in your trading today. If you start to get angry or upset or emotional, don't forget, like Jared Tendler says, you don't think straight when you're in that situation. Find a way to get yourself back to center, get back in the markets. If you hit your personal daily loss limit, it happens. You don't want to do any worse than that. A good friend of mine once told me, the less you lose, the more you stand to make. So get out there and profit today. I was going to put in the group coaching link. There it is. There's the group coaching link, and I will look forward to seeing you there at 12:30. I think I've got a couple of good questions already stacked up, but we're going to have a robust session, I hope. So get out there and be kind to yourself, be kind to others, say a prayer for peace, and we'll see you at 12:30 for group coaching. Trade well today.